I think he did really well.
Yeah, you do.
I enjoyed his little bit of guidance that he gave a couple of days ago, and I think it was fantastic. I mean, he outlined the plan that the monetary policy are likely to take. It was interesting how he linked monetary policy to unemployment, which is probably one of the best indicators as how an economy is performing. So that was certainly
it'll work. It'll get consumers borrowing, businesses borrowing and spending.
Well, I mean, that's consumer confidence, investor confidence has got to improve. It's slowly improving, but we've got to see improvement across the board in economic numbers, and it's got to be sustainable as well. We're moving up from a low base, so we've got plenty of room for improvement, but we need to see that trend continue.
Volumes are low, aren't they, Manoj? You think a correction of 10% is possible? Why?
Well, we're fairly frothy in the equity market at the moment. We've seen a lot of decent companies perform extremely well. People have been looking for the yield, looking for the dividends, and those companies, the Diageos, the Unilevers, Reckitt Benckiser's, have done extremely well. Where is the room for upside at the moment? Volumes are extremely low, probably 10, 12, 13% lower than where they were this time last year. And that creates volatility, which is what we're seeing. We're seeing that choppiness intraday as well, where the market doesn't have any direction, and then all of a sudden, towards the end of the day, it closes lower. So, there could be a potential move down in the FTSE over the next month or so. It could drift down to the early 6,000s, but
then come back.
If it does do that, then I think we'll see a strong move up in the last quarter of this year.
When are we going to see the highs, the record broken?
Well,
over a decade ago.
I think we could see it in the next quarter or the last quarter of this year.
Yeah.
So we could see that 7,000 level breached, and maybe even slightly higher as well before we start to tail back off again.
We like to talk about gold. It's up almost 10%, Manoj, from its June low. It's at 1,300. It was at 1,200 in June. Still down 20% for the year.
Yep.
You like gold, and you like some gold companies, don't you?
Yeah, absolutely. I mean, I haven't been a huge fan of gold in the past, being an equity investor, but gold has seen some strong volatility, especially to the downside. Hedge funds have been liquidating positions, investors have been cashing out, and it's come back down to a level around about $1,200 where it was a few weeks ago. Since moved up from there, but it's come back down to a reasonable level whereby you can see some momentum coming into the upside as well. So it had a strong day yesterday. I see a move possibly up to $1,500 in the near term, which is not massive, but then it's still not a bad move. And if we see that the Federal Reserve doesn't start tapering QE, which I don't think is likely.
That's a reason to buy gold. And Hochschild Mining is a FTSE 250 miner. You like the look of that. It's down 60% year to date, but since July, it's up 42%.
Yeah, absolutely.
Ooh.
I mean, this is a stock that's seen a lot of volatility, and what we tend to find is if commodities move, then the stocks associated with those commodities move in multiples, and Hochschild Mining has come back down quite considerably. It does take gold and silver out of the ground. It does manage to sell it on, and it is trading beneath its net asset value, which is around about £2 at the moment, so it's just slightly beneath there. And we're starting to see some volume coming in and a base forming, and for the stock to start moving to the upside. I should also say that where we do have positions in the stock.